Hello, everyone. We're going to call to order the Clean Water Services Audit Committee for January 7th, 2026 to order. Kathy, can you please tell us about the recording and then we'll all introduce ourselves.
Yeah, thank you, Michelle. Yes, just a reminder, this is a public meeting and is being recorded. And that the Zoom link has been posted to the CWS Audit Committee webpage for those members of the public who wish to watch. And with that, I will turn it back to Michelle for introductions of the committee.
Okay, all right. So we're just all going to introduce ourselves. I'm Michelle Waring. This is my first year on the Audit Committee and I am currently chair. I'll turn it over to Peter.
Very good evening, everybody. Pete Parmentier, also audit committee member and also my first year on the committee.
Do you want to move it over to Scott?
Hi, I'm Scott Winkles and also my first year on the audit committee.
Jerry?
Yeah, well, Jerry Willie, Washington County Commissioner for District 4. The reason why it's first year for everybody is because this is the first year.
That's
Yes.
right.
We're all rookies. So there.
That is true. And I guess I'll go over to Bruce.
I'm Bruce Corden. I'm the Regulatory Compliance and Audit Manager at Clean Water Services, and I guess I don't need to say this is my first year.
Yeah. And Julie.
Sorry, I lost my mouse. Julie Desimoni, if this is the way it's going to go. I am a principal at Baker Tilly and your audit lead.
And finally, myself, Kathy Leader. I'm the Chief Financial Officer at Clean Water Services. So, thank you, Michelle.
All right. So first on the agenda is Julie. Is it? I know you just said your name and now I'm going to say it wrong. Is it Desmond?
Desimoni.
No, that one. Engagement partner with Baker Tilly, who will review the ACFR, the communication with those charged with governance for 2025, as well as provide upcoming pronouncements on GASB 103 and 104. So take it away, Julie.
Perfect. I do have a PowerPoint presentation, so I'm going to try to share it. While I'm doing that, hopefully this shares the right screen. Can you see the presentation?
Yes.
Got it? Okay.
Yep.
And I do have to apologize. I caught a cold. I've been trying to manage my way for it. Thank goodness for Zoom, because you don't want me in person. But I hope I don't have a sneezing or a coughing fit during the middle of this. So I apologize if I have to go on mute for a second. But again, Julie Desimoni, I'm here to present the final results for the Clean Water Services 2025 audit for the ACFR. I'm not planning on going through the ACFR in detail. You have that at your disposal, but can be available for any questions. But what we want to do here is give you the results of the audit process and the required communications to those charged with governance, to which you are. So what I do plan on presenting in this presentation is just talking a little bit about the service team, our scope of services, what we did, how we performed it, some significant audit areas, our resulting opinions and reports that came out, some required communications to those charged with governance, and a couple of best practices and future standards as we move forward. So this is this is not your entirety of your engagement team, but this is your lead management team. The one person or the two people I do want to call out on here is one, our concurring reviewer, Dan Roberts. This is a very important role. I think we talked about this during the course of our entrance meeting. Very important role. And the reason it's so important is this is our cold reviewer. This is our reviewer that does not have a day-to-day ongoing operation of the audit or with management team. And he is responsible for reviewing all of our planning, our risk assessment, and then when it gets to the conclusions of the audit, he reviews all of our conclusions, and he takes a look at the ACFR and the final, anything that we're issuing as far as the audit. It's a very important role. It's one that we rotate periodically, just to make sure that we have different presence and different sets of eyes on that as we go through the time. So very important person that you will not meet, and it's designed that way. But one other person that was very important during the audit process is Cam Troike. Cam was our audit manager for this audit and really did the bulk of the work and did a great job on the audit. He unfortunately could not be here tonight. So I'm standing in his stead, but that's him if you see him on the street somewhere. So this is our scope of services, and this is very consistent with what we did during our planning process. But we completed the annual financial statements, which is your ACFR for the year ended June 30th, 2025. We also issued a communication to those charged with governance, both our pre-meeting and then our post communications. I'm going to go over the highlights of that letter. I promise not to go into its entirety, but I'll get all the highlights out. We also assist with technical review of the financial statements for compliance with GAAP. And this means that we're going over new standards, all of the financial statements, making sure they have everything that's required within the financial statements. And then we'll talk a little bit more about the Oregon Municipal Corporation. So we are required to do, because you are a municipality within the state of Oregon under the ORSs, you're required to do a separate set. It's about 13 compliance procedures, of which probably 4 of them are pretty significant, including public contracting, budgeting, some insurance requirements, and cash, and who your bank depositories are probably your 4 most significant ones this year. So those requirements, we do the testing, and then we have to produce an opinion upon how those testing results went. And feel free to stop me at any time if you have any questions, or I can take them at the end if you have any. During our planning, these are not the only significant areas. There's many, many significant, obviously your debt, your expenses. We have a lot of significant areas, but one of the presumed risks of every single audit out there is management override of controls. So we do have to look at that and how they impact significant financial reporting. So that is something we look at. We take a look at journal entries or accounts shifted from account to account. Where could that be? What would be important that could influence the decision of management in a municipal utility and a municipal of your type, where a lot of that could be is in debt covenants. So we're being very, very particular in are there any movements of expenses or anything that could impact your debt covenants. That would be something that management might do. So again, we just take a look at that and think about where override of controls could happen. And then your industrial revenue. Your industrial revenue is interesting. And so we take quite a hefty look at all of your revenue streams. And then we actually put an emphasis on industrial revenue and confirm that just due to the sheer dollar size of it.
Julie,
so this is
quick,
go ahead.
Real quick.
Sorry.
How long has Baker Tilly been auditing CWS?
Baker Tilly only a year, but the prior Moss Adams, So So the prior Moss Adams, goodness, that's we've had, I think this is our 2nd or 3rd contract with Clean Water. We've had
so looking at those risk areas are standard for you then.
Yes. Yeah.
Okay.
Very standard. And our team, just to back up a minute, our team is also a utilities-based team. We do our work in the utility space. So we're coming in with a business flow and a business knowledge that you won't see with general auditors in that space. Jerry, did you have a Yeah,
I did. So you touched on management override, which was interesting to me, and then industrial revenue. I understand the management override. I didn't realize that you actually reviewed part of that. That was part of your audit procedures. But and maybe Kathy can touch on that just a little bit about who has authority and some internal controls that we have on that. And then the industrial revenue, I'd like to have a little bit more definition on what that is, unless you're going to do that later. And then I'll just hit the pause button.
No, I'll let Kathy, I'll pull up the information real quick, but Kathy, you want to take the controls on management override, maybe journal entries and cash controls would be probably your helpful.
Yeah, definitely. So we have set internal controls and processes on all the functions within the accounting department, from cash receipting, permit and issuing, billing for revenue, service fees, also any cash receiving, accounts payable, contracting, AP, payments to vendors. And inside of there, then we have a process that's documented, and there's securities and who can access into the system and enter information related to payments received and payments going out, payroll. And then within that too, there's this management oversight, so review of transactions that are happening inside of the system, both inside of Oracle through approval systems formally in the system, or through review and write off on journal entries, for instance. So there's this management oversight in all transaction areas within the finance and accounting area.
And when
Okay.
we do our risk assessment cannot presume that you have good controls. So we presume that you have no controls, and that's part of the AICPA standards. So that's our risk. We then layer in, okay, how well and how strong is your control processes, which you've got very strong control processes, especially over your billing and all those areas. So how well do those, and then that's what defines our future, how we're going to test those accounts. But when we're thinking of them, it's really, hey, this could happen, and it's a presumed risk that we have to look at it every single one of our audits. And then on the internal or on the industrial revenue, it's the primary reason we call that out separately from your other revenue streams, because your other revenue streams, don't get me wrong, are extremely important as well. But there is some manual handbill calculations that bills in the system. So anytime you look at there might be a manual, we just want to make sure, and all your industrials may have a little bit different of calculations. So that's just where that came through as far as your revenue and your industrial. And then what we do to address that risk is we take a look at your internal controls over that, which are very strong, again, segregated in the right way. Generally, a lot of our revenue streams we can perform analytics on, but in this case, because the way that industrial comes in their cycles and when they're pulling revenue, it's very difficult to do that. So we actually perform external calculations, and we recalculate the billings, and then we'll actually confirm with your external parties to make sure that those balances are known, and we understand what those are. That would help. We spend a lot of time in your billing processes. Any other questions on those? Perfect. Okay. So I'm pleased to report this is the happy dance part of my performance. That's not the right word. My presentation. That's the other word. Very pleased to report we once again provided an unmodified opinion or a clean opinion to your ACFR. We had no compliance findings on the Oregon minimum standards. And again, probably the most significant areas that we spend time in just with the nature of your entity is your contracting and making sure procurement is in line with what the standards say. Your cash is in depositories that are appropriate. Insurance requirements that we can't come out and say we know what are appropriate, but you've followed all the standards as far as obtaining appropriate insurance and review of that insurance, and budgetary aspects. And then we found no material weaknesses from the audit. We are very much aware, I know this is next on the docket, of what occurred last year, and did take quite a bit of time to gain an understanding of what occurred and how that was being resolved and what management was doing about that, and how the board and the audit committee were looking through everything. So we spent a lot of time from a material, and please note that when you are at a financial statement level, your numbers are quite a bit higher than that's what we assess to, is quite a bit higher of a number. So it is known. We've seen how management is reacting, how the board and the audit committee are reacting to that situation. But at the end of the day, we didn't find anything that was significant from a material standpoint of the organization over your financial reporting. All right. There were 2 new standards this year that were implemented that we had so much fun with. Actually, one was fine. The other one was just fun. It was GASB 101 and 102. We're really hoping for GASB to maybe take a 5-year rain check on new standards here sometime soon, but they don't seem to be doing that anytime soon. So a couple of things, our compensated absences, this was really a new standard that took the idea of compensated absences and kind of blew it up into a much larger issue. Before, compensated absences were really just identified as anything that if your employee would terminate with you as of that day, what would you have to pay them in cash? This new standard really kind of blew that to not necessarily, now it's if there's a potential of you having to pay them out within the next year, the years following. So it kind of blew out that whole, if you terminated, you'd have to pay a standard, and brought much more of a significant obligation on. So management did report that and did go ahead and get that reported within your ACFR for the current year. We did have an adjustment. There was just a short-term to long-term classification on what should be considered short-term versus long-term, but that's the only thing at the end of the day. We thought that what the work that management did on the 101 was very good. And then 102 was regarding certain risk disclosures. This is hitting the counties a lot more than really the utilities, primarily because we've already had a lot of our kind of concentration and footnote disclosures talk about risk. So we really didn't see, it was assessed, but we really didn't see an impact to the financial statements for the 102. It was really just a disclosure item as well. Then finally, I already talked about the audit adjustment that was made. There was one proposed audit adjustment. What this means it was not captured within the ACFR of the financial statements. And the reason for this, there was a legal settlement that literally finalized subsequent the year end. So management provided an estimate to it. And right before we issued the financial statements, the final settlement came through, and it was that dollar amount different than what management had estimated it to be. We knew all along this is not a matter of us not knowing about it. It was really just a timing, and we knew that management was planning on passing on this adjustment if it came in under materiality. So it did as supposed. We're just required for our audit function to post that and to accumulate that and make sure that nothing aggregates over our threshold. So that's what that adjustment was for. It was one that we were expecting to see or potentially could see just based on the timing of the lawsuit.
So what is your materiality threshold?
So I can't actually disclose exactly what materiality is because it is considered an audit estimate. But I will tell you where we come down. So if you look at your balance sheet versus or your statement of net position versus your statement of change, balance sheet and income statement, your balance sheet is much more massive than your income statement because it has a capital plant in there, which is years and years and years of activity. And you've got a lot of structure there. We base ours on our expertise. We base ours off of your operating revenue because those are really based on your rates. That's what your customers want. So our general materiality is somewhere between 2 to 5% of operating revenue. But it's important to note that's a quantitative number. We also have many aspects within the audit that are qualitative in nature. So if something were to occur, if something were to like just something qualitative that would occur that we'd need to assess, we'd assess it even if it was not on a material. Just like we were known that the issue that's before you later on in the agenda is it wasn't material to the overall audit, but qualitative, it was important that we understood everything that was going on. So we spent quite a bit of time on that. Our past threshold is 5% of that materiality number. So it's a much lower threshold that we post to what we call our past adjustments.
Okay, thank you.
And that's for aggregation risk. That's for if we had 30 of these, 20 of these, 10 of these, and they aggregated up, we want to make sure that we're capturing that and assessing it. Perfect. So we do want to say we know there was a lot of change in the accounting department this year, and the team was fantastic in getting through the audit process and getting through everything. Kathy got to learn a lot about. Oh, Kathy, I forgot the name of the financial system that you were using, the financial statement drafting. She
Oh.
got a crash course.
Gravity.
Gravity. She got a crash course in gravity. Hey, that's kind of funny. That she got a crash course on the gravity system and had to work through that. But we really appreciate we were able to issue right at the beginning of December as planned. We were able to get TKW all of the component auditing information over to them and didn't hold up the county's audit whatsoever. So we really appreciate all the hard work, especially with all the change that occurred this year. That's what I have prepared for you. I'm open for any questions.
So Kathy, can you
Okay.
remind me about how much staff you had turnover? I can't remember.
Yeah, so it's been a challenging year for me for sure. So in May of this year, our controller got a great new position with Port of Portland, and so left us here. And then a month later, so at the end of June, my fixed asset accountant left also. And so I came in, then had to step in and basically oversee the whole ACFR and do all of the fixed assets for the district. It was a challenging year. At the same time, we were doing a third-party forensic audit. So it definitely was work.
Have you been able to backfill those roles, or are you planning to?
Yes, so we did get a new asset management accountant who started right when we were done with the audit. So she's new and learning, but great. We do have her on board. I'm still looking at options with regards to the controller, whether I go with the controller or if I underfill and train within.
So I heard you, Julie, I heard you refer to TKW. That's the auditors for the county.
Yes.
What impact does Clean Water Services financials and financial position and all this stuff have on the county audit?
That is a great question. So technically, they're considered a component unit. CWS is a component unit. It's not considered a blended component unit because you don't have enough management override, or they don't have enough. So literally, if you look at your ACFR and you see the CWI, how we present the CWI, it's the exact same thing. So it's shown as its own column. It has its own disclosures within the county, but it's not blended within the county's financial information. So from a business perspective, very little. From a GASB and what's required on the GASB side and component units, it has enough to be drawn into as an unblended component unit.
So that's the importance of Clean Water Services getting their audit finished up and completed, because we certainly don't want to hold up the county. I know that we are on extension, and it's because of a couple of transitions that we're doing internally. So we're trying to make sure that we're not too far behind on that. But so that's good to know. I appreciate. I never thought about what that connection was, but so thank you for that.
Yeah. And we generally our goal is by that December 1st to give our goal is to move it. We ended up having to move that out a while back, but we're really close back to the December 1st. So we've been far ahead of the game, and then we don't ever want to cause the county, because they've got to do some work on our side too. So all that work has been delivered to them, and all of our letters have been delivered.
Okay. So Kathy, I don't know, my focus homework on this is I sent you a email, said I was cramming for the final. 156 pages of information here. Are we going to touch on any of that? Was the expectation that if we had questions on specific things on the financials, we would bring them up now ask Julie? I mean, so what is our procedure? Since this is our first audit meeting with a real audit statement in front of us, what would you like to see?
Well, yeah, definitely, if you have any questions related to the material that you read, at this point, definitely bring them up and we can respond. If you think of things later, definitely get back in touch with me and I will make sure to have it distributed to all of the committee members, any information we provide.
Okay. Well, there's a tremendous amount of information in that, as you would understand. And so, you know, truth be told, I didn't make it through to 156 pages. But from my standpoint, what I look at are year-to-year comparisons. And then I guess anything that pops out to me that I don't understand. So if we look at, fortunately, I put down the page number on this and again, is this this information that I'm looking at, the 156 page document, does everybody have that? And Julie, are you looking at that as well? Okay. If we go to page 34, and we're talking about in this basically statement of activities, which I look at as kind of a condensed profit and loss. There's some revenue things in there that I'm not familiar with. So one is loss on disposal. I mean, it's $2.3 million, so it's really insignificant, but you know, I'm always curious about what we're disposing. And then the term capital donations is unique to me. So what is that?
Yeah, sure. Okay, so firstly, on the loss on disposal of assets, what goes into that category are, you know, when we surplus and dispose of assets, they show up in there. We're removing them from our books. If there's any residual value, it shows up down there. Also, sometimes we do have capital projects or things inside of our capital improvement program that do not fruition into an actual asset, and they do get written off. So that's a combination of different things that happen in that category. For capital donations, we do a lot of projects with cities and construct infrastructure that will then be owned and maintained by the city. And so we list those as donated infrastructure on our books. So we incur some capital construction costs, but we're donating those to the city, and then they will go forward and maintain them. And those are usually inflow and infiltration type projects within the cities.
Oh, okay.
So conveyance.
Okay. Well, that's not a small number either. That, I mean, that's $1 million. So, you know, really in the big picture, again, I'm looking at the comparison of 25 to 24 and what kind of activity was there in 24. And then loss on equity in a joint venture. What joint venture is that?
Barney Reservoir. We are a part owner of Barney Reservoir. So that's our participation in our equity in that.
Okay. Is everybody familiar with Barney Reservoir? Okay, you might want to give a little history behind that. Michelle and I know because City of Hillsborough participates a lot with Barney Reservoir, and I've visited up there, but go ahead and give an update.
You know, I'm going to pass that to Michelle because Michelle, they own and manage Barney Reservoir.
I can share on that. So Barney Reservoir is a joint venture, and Hillsborough is the managing partner. So talking about, we need to get our financial statements done for Barney done early so we can give those numbers to Clean Water Services so they can finish their ACFR. So we always work on Barney and our other joint venture, Joint Water Commission, early so we can get those numbers out to our partner. So the reservoir is out there in the hills, and I'm pointing that way because I'm in the Civic Center right now and I'm pointing west. And it is a joint reservoir that's owned, and it's owned by Hillsborough, Forest Grove, Beaverton, Clean Water Services, and Tualatin Valley Water District. And it was built back in, I think, the late 60s. And we all use it for different things. And I think Clean Water Services, you use it mainly to put water into the rivers to do your fancy stuff.
Yep. flow augmentation, yes, and cooling.
Yeah, Barney Reservoir has a really visionary history because as it was built back in the 60s and then it was expanded again, I believe, in the 90s. None of this would be possible now under the environmental rules. So we are very fortunate to have a reservoir up in the Coast Mountains that is fed by, of course, all the rain and snow up there, and also backfills Hag Lake. And so, yeah, as a county and certainly as a region, we're very fortunate to have that reservoir up there as a supplement as well. So anyway, it's very cool. If you ever get a chance to go to Barney Reservoir, I would encourage you to do that. It's very cool. I don't have any other questions on this. Again, this is interesting stuff to me just because of the narrative that goes in. So this is a very significant report, Julie. It's a great job you guys did, and very informational. So I'm going to certainly take the time to go through and make it through all 156 pages, but it'll certainly be a good foundation for moving forward on this committee.
And I had a question for you, Kathy. So in the stat section page, what page am I on? 131. The unrestricted position has grown significantly in 10 years. And it looks like that's mostly related to sanitary sewer. And is that been an intentional? Are you building up for something major, or is it just, what is that?
Yeah, a little bit, definitely, over time, we had the safety of dam and dam raise at Hag Lake that we were looking at as a potential project that we were saving reserves for. Also just for the ability to move quickly, say for instance, when a developer comes in and we need a pump station, getting those on board, it maybe had not been planned to happen as quickly. So having those reserves available would be very fluid in where the need is within the district. But yeah, so and now as we move away from the dam raise at Hag Lake, we are looking at a reuse program, and then now we'll be putting some of these funds into to help with the water cooling and flow that we would have gotten with that dam raise. So yeah, definitely the ability to maneuver quickly to projects, and then also helping then with our coverage ratios as we look in the future to issue debt.
Kathy, isn't this also a part or a piece of it, the capital contributions that were provided? Doesn't most of the capital contributions come in that side?
Yeah.
So what's interesting about the GASB 33 is when capital contributions from like your developers come in, because there's no debt associated with them, they're pretty much giving, kind of like we were just talking about giving somebody else. You're given these facilities, they go straight and unrestricted. Because there's no debt to offset it. No. That's true. That's not unrestricted. I'm thinking that backwards.
Those are net investment in capital.
Those are net investment. That's helped the net investment without, because the debt hasn't offset it. Sorry. Yeah.
And
how about that backwards?
Your sewer operating fund has 283 million in it, and that's most is unrestricted. So I looked at the number. I'm like, that's mostly sewer.
Just for awareness, on the restricted side, what's in there are SDC revenues and debt reserves that were bond funded.
And then my next question is on page 120. On your swim operating fund, you transferred out 18.7 million. But I couldn't track it going to other swim funds. So would you have transferred some of that perhaps to your sewer fund?
That is so. Storm and sanitary sewer are two separate utilities.
Okay.
And all operating, including labor and material services, occurs inside of the sanitary fund. And so we
Oh,
do a
okay.
transfer every year to move over money related to operations to that fund, so that it sends it back to reimburse the sanitary sewer fund.
Okay, that makes sense. I was like, that's a big number. But you're right,
Yeah.
I'm not seeing any personal services in your swim fund at all.
No.
And then my last question, your captive insurance, you build that fund balance just by transferring money from your sewer and or swim funds, or just sewer fund?
So so you mean for our Clean Water Insurance Company?
Yeah.
Yes, so Clean Water Insurance Company is funded through premium. So the district pays premium on policies held with the captive.
Okay.
And that is paid for by both programs because it's coverage for both.
Okay. Because yeah, it looked like it'd been increasing. It's like a couple $1 million a year now versus where you used to be.
We have also started doing investments in that program that's helped increase earnings as we've built reserves there.
Oh, my one last question. I have to go back down in the stat section. What is the difference between administrative staff and support staff? And your support staff has almost doubled in the last 10 years. Let me find the page I was looking at.
Yeah, where is that one?
I will find it. I wasn't as prepared as Jerry was with my page numbers, but I did have questions.
Let's see, let me find that.
It is on, nope, that's not it. It is on page 149.
Almost there. Yeah. That's been a challenge. Over time, people have categorized them differently, but administrative staff, we've normally haven't had those be individuals that are doing administrative services or in an administrative department, so executive level. Support staff has really been anything outside of that. So like accounting services, legal services, right? Those support services to the district. And then operational staff are those that are, out in the treatment plants, out in natural systems. So the operating units. And then capital is, so some of our people charge to capital projects. And so that's the portion that has been charged over into the capital program.
Okay. All right. Those were my questions. Do any of the other?
Michelle, if I could
ahead.
just add to that, and Kathy, certainly feel free to correct me. One of the things that has been difficult for the budget committees has been almost a constant remodeling of the org chart. So it was very difficult for us to go from one year to the next in a comparative mode because they moved departments from here to over here, and then they eliminated this position and added these positions, and it was very difficult. So that was one of the directions that we gave to Rick as interim, was stop doing that.
Yeah.
We've got to be able to be comparative, so we know what a head count looks like, and what the definition, if it's an administrative, a support, or operations. We have to be able to compare apples to apples, and we have not been able to do that.
Yeah.
Last year during the budget committee meetings, I took the org chart and completely redesigned it compared to last year. So I was able to compare. And Rick promises me he's not going to do that to us again this year. So,
and I hope he keeps his promise, because I have to tell you, that is an accounting nightmare for us.
Yeah.
On the budgetary and the accounting side, people don't know how hard it is when you move over to a new year and all these things that you accrued back and are reversing are hitting programs that aren't there anymore. And you're having to fix it. Yeah. So I keep emphasizing that that's what we want to do. And so I hope that that's the plan.
Well, and I think what we look at as well as total staff, you can see total staff has considerably gone up. And so from last year to this year, we're up 12. Okay, so that's not a big deal. But if you look at over maybe the last 5 years, it's from 406 to 495. That is pretty significant. So from our standpoint, again, not necessarily from this group, not from the audit, but certainly from the budget committee, we look at those things and we say, why? What are we doing? And because we have to also turn to outward facing to our cities and say, this is why we have to increase fees. And we have to be able to justify these numbers. And so anyway, it's a big picture, but to add on to your question. So probably more information than you wanted.
Yeah, I appreciate it.
I've got one as well. So, and really, it's kind of a peripheral question. So, captive insurance limits and reinsurance adequacy, specifically, I'm thinking around earthquake and cyber. How often are those limits actually reassessed?
We do that annually, as we set the budget with Clean Water Insurance Company and our operational budget. And so, yeah, we do review risks and identify needs. And it really helps us having that captive because we're able then at the business line level of the different insurance coverages to see, how they're performing and, where our risks are and where our losses are. So, yeah, we do that annually.
Appreciate it. Thank you.
So Kathy, would it be, you touched on this a few minutes ago when we were talking about Barney. Would it be beneficial maybe that you update this group on where we are with the Hag Lake, Scoggins Dam, why we basically stopped collecting money for that, and kind of what that situation looks like?
Yeah, thank you for bringing that back up because I thought about it too, because there is still a large project there at Hag Lake, and that's safety of dam that we all are going to participate in. So that still is a big ticket item that is out there in the future as we work with Reclamation, a federal program, to construct that, and then we participate in the cost along with the other co-members. So there is that piece of it. So we are continuing to go forward with that safety of dam. But the cost to do the raise of that dam was getting to be so expensive and cost prohibitive. It didn't make sense with the amount of water we would receive from the project. So we decided, and our innovation team had been doing a lot of work and found a new way to look at water and access water through reuse. And so we're really focusing now on that program to do the flows within the Tualatin Basin.
Yeah, and I think in addition to that, for years we've been lobbying the Bureau of Reclamation, our federal delegation, to fund this project. We are on the hook for 30%.
Something like that, 25, something like that.
And which became a really significant number. I mean, the project when we first started talking about this several years ago was under $1 billion. Now it's well above $1 billion. So when you take our responsibility as 30% of that, it's again, it's a pretty significant number. The Bureau of Reclamation under Trump hit the pause button. And so they said, we're not going to be doing these projects. So from my standpoint, it became, so what's the Band-Aid we can put? What's the minimum we can do to Scoggins Dam to have some safety reinforcements on it, but not spend $2 or $3 billion to do that? So that's the process. That's where we are right now with that. And what makes Hag Lake and Scoggins Dam so significant to Clean Water Services is the type of users that provides water to agriculture, but also it's a main life blood of the Tualatin River. And so we have a very healthy river system, and it's primarily because of Clean Water Services and certainly the ability to use Hag Lake to keep the water flow going. So, and the biggest issue, I'm probably giving you more information you want, but the biggest issue is we have water temperature that we have to maintain in the Tualatin River. And if we cannot keep cool water running out of Hag Lake to maintain those water temps, then we'd have to be installing coolers, which is basically putting a refrigerator in the stream to cool the water down. Very expensive and very expensive to maintain. So we're constantly monitoring what goes on at Hag Lake, and certainly that dam is a critical part of that. So anyway, again, I don't know what that has to do with the audit, but it certainly gives you a perspective on Clean Water Services operations that probably is a little bit behind the scenes.
Scott, do you have any questions about the financial statements?
I don't. I am interested in the conversation we had about it was indicated earlier about the controls that are put in place after the situation of last year.
That is actually next on the agenda for Kathy to provide us an update on our third-party forensic audit.
Yeah, thank you, Michelle. Yeah, just an update. The audit has been completed and management has prepared a response to it. We are going to be issuing, placing those documents on our public website tomorrow, in preparation for a board work session on the following Tuesday. So they're going to be available tomorrow. As soon as they're available, I'm going to push those the report itself, the full Moronis report, and the management comments to this committee and to Julie with Baker Tilly, so that you have those also.
And from that, did you put in more controls or new policies, or what is Clean Water Services response?
We updated our policies, and did do a lot more training and review of costs submitted. Yeah.
One of the things that we eliminated was for you municipal geeks, you're aware of P cards. They're purchasing cards. They're basically credit cards that individuals have in the organization that they can use to purchase certain things, and then they fill out the paperwork to substantiate that. That was being abused, as you'll see in the report. And so we have eliminated, if I said all, would I be correct, Kathy? We've eliminated most P cards in
so we all executive level staff turned in their P cards, so that was director and above. And then for all P cards, they have airline and food locked on their cards, and only administrative coordinators who help with planning travel and meals for training can purchase the food or tickets or registrations.
Yeah, that was just a control nightmare. And the county has followed suit on that. And I believe they have eliminated all of their P cards.
Oh, wow. Wow.
I don't know of anybody that has them, but they may have the same criteria as Clean Water Services. But I happily gave mine up because it was a pain in the butt and I never used it anyway. So
Is it P? I mean, I'm not familiar with P cards. In my work, I'm just issued a company credit card for my travel. When I travel, is that the same thing?
Yeah, so they're a credit card that allows staff who've been authorized to hold one and have signed and recognize the proper use of the card, and are allowed to purchase items that are small dollar routine things online. It's a way to facilitate buy of goods through a credit card.
The best thing about purchasing cards, because Hillsborough has them, is that you can set limits for each card holder by per transaction per day. You can limit which merchant ID that they can purchase at. So like airline, bars, gambling, different things. You can prevent them from being used for if you wanted to withdraw cash. So they have a lot more controls over them just than a basic company credit card. And so how you use them and how you review them. For Hillsborough, we have a very robust P card program and also a very robust audit and policies about if you don't do certain things, how the process of reprimand goes to the point we will take your P card and you will not have it. And then your supervisor can pursue personnel issues with you because you have not adhered to our policy. But we have staff that audit all purchasing card charges every month and look at them. And we do other sorts of auditing, but it can be a place for fraud or abuse, I should say, if you're not monitoring it and doing that, because people do it's convenient. We have people, I don't know if you had this issue where people accidentally use it for their personal use. So we require that either they get that charge taken off or they have to pay us cash. We won't take a credit card to pay for a credit card. So they are a great tool, but they do require a lot of monitoring.
Michelle, that would never happen. A personal
What?
charge, never. Accidentally, I
I'm
swear.
pretty
So
sure it's happened a lot.
Yeah.
So if I could follow, so if you have staff traveling,
Mhm.
or do they get reimbursed, or I mean, is there an efficiency issue with the ability of staff to attend conferences or do work-related travel?
Well, I would tell you for the district, they have two options when they go in travel status. They can get a travel advance. So they submit in their requests for travel and their estimate of their what it's going to cost. And we give them 70% of that advance. Or we do have what we call travel P cards that they can utilize so that they aren't using their own credit in that travel status. But it would only be for their lodging, shuttle services and baggage airline costs. So things like that. They're on a per diem status, so they get just per diem on the meal side.
Okay. Because I think there are some challenges with having people use their personal cards because you're then, because of mileage points and hotel points and those sorts of things, it's not without its own potential abuses.
Yeah.
And you probably have some OGEC implications if you haven't done the proper compensation authorizations as well.
Yeah, we've added language in our policies that recognizes those as compensation.
Okay.
Well, yeah, and there's hardly a credit card that you have nowadays that there isn't some perk, either cashback or miles or something. Marriott points, for example. So they're, again, full disclosure, 4 of your county commissioners are dealing with the ethics committee right now on travel. And I am there because I booked my own travel on my own Alaska card and got miles. And there was no written policy until we just found it recently that said that that's considered part of my compensation. So yeah, it's fraught with all kinds of issues.
So on the you obviously have a travel policy now, and do you talk about what flights are allowed? Do you have that
Yeah, so we define that in there. It's so it's economy. We do look at to do direct flights, but if there's a layover flight that is reasonable times and saves money, we do defer to the lower flight price. But yeah, we do have set restrictions on airline.
Peter, do you have a question, or is your hand still up from the last time?
You're muted.
it's like hands up, muted. I mean, sorry about that. I will drop the hand. I apologize.
Okay.
I have a follow-up on Commissioner Wiley. That's I'm aware of the Washington County OGEC, which is why I asked about the P cards, because I see the potential challenges if the proper declarations and blessings have not been completed that are suitable for the OGEC. But on the captive insurance side, and if this will be in the documents tomorrow, I can wait. But if my understanding was the captive insurance company was incorporated in Hawaii, and it's audited under Hawaii law.
Yes. Yes.
And was that part of the forensic audit?
No, Clean Water Insurance Company is a separate entity. The audit was for Clean Water Services and our transactions. Any of the travel or any related costs for Clean Water Insurance Company are managed and paid out of Clean Water Insurance Company. And so they have their own travel procedures and tracking within Quick, and those costs are not reported on Clean Water Services books.
So my question is, so Clean Water Services Insurance Company, they were issuing P cards or expense accounts as well?
So Clean Water Insurance Company does hold P cards, yes, specific to the captive, and they're used for captive business, including travel.
So did they follow
Was there a
clean?
conduct?
Go ahead, Scott.
Were there conduct issues with how those expenses were undertaken?
No, and there was no review of the captive with regards to travel. The forensic audit was related to activities of Clean Water Services, not the captive.
So the travel to Hawaii, was that paid by Clean Water Services or was that paid by the captive insurance?
The captive insurance company paid for those.
And the new rules that you put in place for Clean Water Services employees, did that apply to the captive insurance?
I will have to look to see if we had, I think there was a recommendation that we put policies in place. I'll have to look to see if that was done at the captive level, but definitely something that should be in.
Because otherwise it could happen again. If
Yeah.
the captive insurance has different rules and
That's
is using that money, then
Yeah.
that same sort of thing could happen again.
Yeah,
correct?
yeah, definitely. I think that we need to make sure that was, I know that was brought up and it was a recommendation. We just need to make sure that the board takes action on that and does similar requirements.
I guess I have a concern that we don't have a full picture if we're not seeing the books from
I can
captive.
definitely, I can send you the audited financial statements from Acuity and their notice to those and with governance. I'll forward those to all the members so that you have those.
Yeah, I mean, I would think that if everything's going to go out on the website tomorrow, it seems like that would give a complete picture to whoever your intended audience is.
Yeah. I know right now the posting that's going to, it's on the county, it's gonna be on the county's site and Clean Water Services site, and it's specific to the board work session next Tuesday, and it will be the Moronis report, a PowerPoint, the Moronis report, and management's response to the Moronis report.
Okay.
I'll talk to Sue, who helps me in the office of CEO, put together on the audit committee site. I can definitely post out there our quick financial statements too, and then also push those out to this committee.
But just for clarification, the media has been focused on two different entities, Quick being one of them, and Clean Water Services excessive spending on meals. and other things. Okay. So was criticized because they are because of their travel to Hawaii and because of $1,000 rooms, quite frankly. The number of people that went and the purpose and all of that sounded like it was a boondoggle rather than a real legitimate business trip. Reality was, it was legitimate, but as all of you, if any of you have traveled to Hawaii lately, I don't know, it's kind of tough to get a nice resort room for less than $750. And so there was a lot of critique in that. And right or wrong, we being Clean Water Services Board of Directors, we've looked at this, and you'll hear more about what we have decided coming up. The other part of it was the Clean Water Services spending, primarily at the executive level for meals and other things that were considered excessive. You're going to see that in the Moronis report. There's a lot of information in there. So, kind of sit down, get a big cup of coffee and plow into that. But it's important that we make sure we understand the two differences of what Quick is being maligned for and what Clean Water Services was being investigated for. There's been a lot of conversation about why do we need an insurance company, and I define it this way: it allows Clean Water Services to buy insurance at the wholesale rate rather than full retail. And I had a couple of clients way back in my CPA days that did exactly what Quick does, only on a much larger scale. And it does save significant amounts of money. And I think we can show that in the process, that it saves Clean Water Services insurance money, which we all know is very expensive and going up astronomically. So it's very important that we maintain this. It's just maybe we lost our way. I'm saying I didn't have anything to do with it, but maybe we lost our way in managing Quick, and certainly what that looked like and the spending that was encountered. So stay tuned. There's going to be more information forthcoming.
And the board of directors for Clean Water Services is not the same board of directors for Quick, right?
Yeah, no. Yeah.
So, if the public wanted to have a meeting with Quick, which I don't know if you guys have meetings except in Hawaii, how could they come and say, ensure that they adopt rules similar to clean water? Because we're saying it like they're two different, but they're the same people, same people there, to make sure that those same sort of, ideas that have come into Clean Water Services are being mirrored by Quick, because you really are, technically you're separate, but in the eyes of the public, you're the same. It's the same. The money that goes into Quick is Clean Water Services monies, which is ratepayer money.
Yeah, I know in part going forward, the Board of Clean Water Services is going to be involved in the approval of the appointments to that board. And they will be having more oversight and review of the captive as it goes into the future. But the meetings themselves are not public meetings under Oregon public meeting rules, so that they aren't opened to public.
Yeah, and again, you're going to hear more about this. We are changing the structure of Quick, and so yeah, I'll just leave it at that. It's been quite a process, but we've gone through it with a pretty fine comb, and I think we've come to a good resolution. So.
Yeah, I'm actually not overly, I mean, that that it was cheaper to incorporate in Hawaii and purchase the insurance. It pencils out, it pencils out. It is what it is. I mean, we've all been to fabulous places and been locked in conference rooms. So, um, I mean, keeping an eye on how that was done is important to me. I don't think it's not going to Hawaii is not a per se problematic activity in my mind. But if it penciled out, but I just think having the full transparency is going to be beneficial for everybody moving forward.
Yeah. Well, and how we got here, Scott, just to your point, is the landscape of captive insurance companies has significantly changed from when we went into that environment to now. So way back then, Hawaii was far and away the best state to have this kind of operations chartered in. And so, but now there are a number of states. Oregon is one of them, but out of 25 states, Oregon probably is not in the top 25. And so Oregon was not an option, but Arizona certainly was. And so that's what we look at. And yeah, it's a comparative. It's hard to make that comparative from way back in the beginning to now. So, but again, a lot of this information is going to become out in the news shortly.
Do we have any more questions or conversations? If not, we can move on. All right, so next on our agenda, the committee will vote whether or not to accept the Clean Water Services 24-25 audit report. So I ask for a motion to approve if you're so inclined, or do we have more discussion before we do this?
So moved.
I'll
Do we need a
second.
second? Okay, Peter. All right. So no further discussion. So all in favor, say aye.
Aye.
Aye. All right. So we now thank you. So Kathy, I know how much work goes into these. So kudos to you and your team, especially with that new lame GASB 101. Significant amount of work. And Julie, thank you to your team at Baker Tilly. I also know you guys have a tough job, and it's a lot of work, and I'm always glad when we get those out the door.
Especially before year end. And we didn't mess with Christmas. So
That's
this
right.
year.
Yes,
Not the
yes.
week between Christmas and New Year's. So great job,
Yeah.
Kathy. Thank you for the
That's
partnership.
always our goal is to get ours done before Thanksgiving or at the beginning of December, because we don't want to take it with us into the holidays.
Thank you.
Thank you to the audit committee too, and for this past year and review of the statements and your discussions. I appreciate it's beneficial to the district. I appreciate the time and effort you put into it.
So if there's nothing else, no other business, we can adjourn for the evening.
Thanks. Bye, everybody.
Right,
Bye-bye.
thank you.
Kathy, real quick,
All
are
right,
we
bye.
like
Thank
May,
you.
April, June? When will our next meeting be?
Oh,
We'll schedule it. It'll probably be late May, early June, because they usually do interim in June. So I want to have this meeting before they do interim, so you have an
Okay.
opportunity to kind of set some inquire on anything and ask them to look in any areas that you're interested in. So yeah, definitely late May, early June.
Okay, awesome. Thank you. All right. Thanks everyone.
Thanks,
Have a good
bye.
night.
Thanks,
good seeing everybody. Take care.
Bye-bye.